All right, good morning, afternoon, evening, night, whatever time it may be for you, wherever you may be in the world. I want to do a quick audio visual confirmation. Make sure you can hear my voice. You can see the screen in front of you. It's time to get going. Really excited to be here. Pretty jazzed up. How's everybody doing? Everybody doing well? Everybody doing good? Doing okay? You're here, so that's good. All right, let's get going. I want to make sure first and foremost that everybody understands the risks involved and associated with trading and investing. Please be aware of those risks and willing to accept them. Also understand I am not a commodity traded advisor. What that means is, well, pretty simple. I'm not here to give you advice. I'm not here to trade for you. I am here, however, to teach, to show, to guide, to educate, and also I'm gonna add something onto that today. I am here to convince. Oh, geez, Tyson. Wait a minute, what? You're here to try to convince us of something? Yep, I am. Hopefully, help you convince you that trading with the grid makes a whole lot of sense on every single trade that you place. That's one of my goals, and I'm going to give you a couple gifts today that I'm giving for today and today only. And I have two main gifts for you guys. Before I go into those gifts, what I want to do is invite you to go out and like me on Facebook if you haven't yet. I would be honored, and I would love if you did that. That'd be awesome. Some of the reasons why, I think it's important for us to give you reasons why you should do something, right? Well, my opinion, one of the reasons why you should do it is because, well, first of all, I'm awesome. That's like the main reason. Second of all, I try to post things. I'm not like super active on this, but I try to post different things on this page, setups that I'm looking to get into, different ideas that I have, and all that good stuff. And, you know, the more interactive students are with this, the more that I'm willing and ready and able to post, and I get excited. This is also another place to interact with me. If you have questions or comments or whatever, you can interact on this page. So just a quick question, type it in me if you've already went out there and liked me on Facebook, and if you enjoy some of the posts and the content, type it in me. Just wanted to know. I like to kind of get an idea of who's already done this. Okay, so here's one of my things. You don't, now this isn't like a, you know, requirement, obviously. None of this is a requirement, but I would love if you guys, you know, just maybe once a day kind of pop on this page and just kind of check out if there's any new posts, because what will motivate me to post more things are more people coming to this page. That will motivate me. And then also one of the ways that I can kind of see how, you know, who's coming and see kind of are there more people coming is if there's something you like, well then check the like button. And by the way, if you don't like it, well, then give me the angry button. I don't really care. Just give me something. There's got to be some type of emotion, right? Like this right here, this video right here. This video would make me angry because the quality of this video sucks. Now, don't go out there and click the angry button on that one, but that one would be that one would make me angry. So anyway, hopefully you guys are enjoying that. Interact. You know, like the videos or dislike the videos or whatever, just interact with it. That will encourage me to be more active on that page. And I think the more active I am on that page, the more value you will get. So it's kind of a circular form, right? You probably saying, well, Tyson, if you would post more, I would go on to it more, right? Type in a why or yes in the question section if you are like, well, Tyson, if you would post more good content and more videos and more things that actually make sense and charts, I would go onto your page more often. Well, then I'm going to answer back and say, well, okay, well, I'll post more if you go onto my page more. So one of us needs to break. One of us needs to give in, right? It's a vicious circle. I'll be the first to start it. I'm going to post some things this weekend, and I'll get the party started, and then we'll see how it goes. All right, let's dive in. Let's dive into the markets. Angela says she tries to look every day. That's great. I appreciate it. I know a lot of you do. I really do appreciate you guys, you know, the support that you give me and all that good stuff. So, all right, how many of you are in the grid trading strategy? How many of you we've got, I know we have about 100 and what was the last count? We had a little over 130 students in the course up to this point, and we're capping it off at 150 for those that get the grid for life. I'll kind of explain what that means in a little bit here, but the reason why I kind of wanted to mention that right away is because it's going to play a really big theme in what we talk about today. It's going to play a really big theme because I believe every single one of you has the ability, probably with the tools you already have, to be a profitable trader. I believe all of you, because you're here, are on the path to becoming a very profitable, successful trader. I do believe that. Even without the grid. Even without the grid. But I also believe that you will be a much more, in fact, maybe even 2, 3, 4 times more profitable trader with the grid. And hopefully by the end of this, I convince you and show you of that, because I'm going to give you guys an opportunity to get the grid in your hands if you don't have it yet, to get the grid in your hands risk-free. Yes, risk-free. Pretty awesome. Okay. So let's talk about the pound yen. Let's talk about the pound yen. How many of you pay attention to my expert workspaces? So you go into workspace, open expert workspace. How many of you actually pay attention to this? Type in a me if you look at those. If you don't, well, that's okay. I mean, I can't force you to look at them. All right, so I'm going to start doing something a little different. And I actually got this idea. Now, the student didn't bring it up, but when I was talking to, I can't remember the student's name. When I was talking to one of the students at the anniversary session this week, we were talking about my expert workspaces. And I then asked him the question of, well, what is the purpose of the expert workspaces? For my expert workspaces, the purpose is, it's one purpose and one purpose only. It's for you guys to learn from them, right? That's the whole purpose of them. It's not advice. It's not say, hey, take this trade. There are they are trades that I'm in, or there are trades that I'm looking to get in. I want that to be very clear. Every workspace that I post, it's either a trade that I am in, or looking to get in, or managing the trade, or doing something with. I want to let you know that. And so knowing that hopefully is a good thing. But the main thing I want you guys to do is I want you to use this as an educational tool. That's the point of these. And so here's the way that I want to encourage you to start opening these. So let's say you like my expert workspaces. That's great. Awesome. I'm glad you do. What I'd love you to do is this. Get in the habit of going, I'm going to start labeling these like this: EuroCAD daily, Aussie CAD daily, Pound CAD daily, Pound New Zealand daily, dollar yen position trade, Pound yen daily. I'm going to start labeling them like that. And what I would do is this. Write, instead of just going and opening these all up right away, write these down. Write these currency pairs down. EuroCAD daily, Aussie CAD. So for example, let's say you wanted to, wow, Tyson's got something going on in the pound yen. Oh, I want to see. But before you open this up and see what I am looking to do on the pound yen, I've labeled it as pound yen daily, so now you know what currency pair I'm looking at and what time frame I'm looking at. Type in a wire, yes, if that makes sense. So now what I want you to do is, instead of opening it up, go and do your own analysis on the pound yen daily. And once you do your own analysis and you come up with your own conclusions and you answer these questions, these are every time I post a trade, here's the 3 questions that I will be answering in every trade that I put on there. Except, like, I have some target workspaces that don't necessarily have a stop level at, but here's every workspace has pretty much these 3 questions answered. What direction is the market most likely to move in next? Every workspace that I post, or 90% of the workspaces I post, will answer that. I'll give you my answer to that question when you open that up. Number 2, where is the market most likely to move to. Almost every workspace I post, well, pretty much every single workspace I post, I'm going to give you a clear-cut target. There's going to be a clear place of, okay, well, I think we're heading here. And number 3, at what price am I wrong? So what I want you to do is this. What I want you to do is when you go into the workspaces and you see, okay, pound yen daily, don't open it up yet. Go into your own pound yen daily and do your own analysis and answer these 3 questions doing your own analysis. Type in a Y or yes if that makes sense. Because then once you do your own analysis and you answer what direction is the market most likely to move in, do your analysis, come up with a decision. Where is the market most likely to move to? Do your analysis, come up with a decision. At what price am I wrong? Do your analysis, come up with a decision, and then look at my workspace and compare the 2. Because when you do that, what that's going to do is that's going to help you compare your analysis to mine, which will help you see how close you are to somebody who does this for a living and who's been doing this for 17 years. How close are you to analyzing the markets in the same way? And if you get the analysis, if you come up with a different different direction or different levels than I come up with, it will give you clues on why or what you're thinking compared to what I'm thinking. Now, I know I've asked this already a million times, but I'm going to ask again. Type in a me, M-E, or Y if you think that is a valuable tool and a valuable lesson to do consistently, and it'll provide valuable lessons every single day. I honestly think that could be one of the best things you do for your education. Because I'm going to label these pound yen daily, so I'm going to label the pair and the time frame I'm analyzing on. And when I post this pound yen daily, you'll know that I answered the questions of what direction, where to, and what price am I wrong using the daily on the pound yen. Okay? All right, so I'm glad that a lot of you like that. That was one of my recommendations. It popped in my head when I was talking to the student, and I think it's just great. It's something that I think will really, really help you guys. Okay, so these are the 3 questions I want you guys to focus on. And everything we go through today, I want you to keep these 3 questions in mind. In fact, I would highly recommend you guys writing these down. These are like the 3 core questions before you place any trade. It doesn't matter what strategy you use, whether you're a target trader, whether you're a basket trader, a divergent trader, a sky trader, a leveling trader, whatever it might be. These are the 3 questions we need to answer every time. So once you have a snapshot of this, you have these written down, because this is important, type in done. I just want to make sure you got to answer these 3 questions before you place any trade. Okay. All right, perfect. So let's go through this. Let's answer these questions. What direction is the market most likely to move in next? Well, there's this pound yen isn't 100% clear. There's a little bit of a little lack of clarity on this chart, and I'll kind of explain why. First of all, now I'm very clear on what I'm going to be doing. I'm very very confident in what my plan is, and I'm very confident in the direction we're moving in. But I also have to prepare for what if I'm wrong. What if I'm wrong, and at what price am I going to be, potentially wrong? So I got to prepare for that also. So if I'm answering these 3 questions and I see this right here, then how do I answer question number 1? Well, how would I answer if I know the market moves in waves of A, B, C? Where's the next most likely move in the market, up or down? So there's only one of 2 answers that we have for question number 1, up or down. So which way, if I'm looking at this, is the market most likely to move in next? If I'm just looking at this, it's most likely to move down, right? Because, if we look here, we know the market moves in waves, right? So A, B, C, D. And on a longer term basis, and this is going to take a while, but on a longer term basis, the pound yen, I could make a fairly strong argument. In fact, I can make a pretty strong argument with this on a longer term chart, such as a weekly and a monthly, that we're heading down also. But essentially, this looks bearish. So if I'm just using that information, I got to say, well, we're heading down. But why is, so this is clear to me. This is very clear. But why is this somewhat confusing right now? Why is this somewhat of a confusing chart for some traders? Here's the reason why. Because what if I didn't have that? What if I didn't start there, but I started here? Now which direction? Now which direction do I have to assume the market's moving in and get a move in next? Now I have to assume the market's going to move up, right? Well, uh-oh. So what do? Do we just sit on our hands? I mean, there is a couple things we could do to make our decision. We could say, well, geez, I guess, I don't know. I guess I can sit on my hands for this one. Because we have that down AB that's bearish, but we have this up AB that's bullish. And to increase that probability of the up AB fulfilling, yes or no, can this up AB go A, B, C, D and still not do damage to this AB down? Yes or no? Yes. So that's a concern. That is something we absolutely need to be concerned with, for sure. With that same thought in mind of where can we fulfill, I always ask myself, what path can price go down to do the least amount of damage to Fibonacci sequences? Let me repeat that. What path? And to master this is like understanding the flow. You'll never understand the flow of the markets better if you can master this. What path can price go through to do the least damage to the current Fibonacci sequences? And right now, if I stop here, this is the path that it could go through to do the least damage to the current Fibonacci sequences, right? It could go up here to fulfill this D and then head down and still not do damage. That's what it could do. But those aren't the only sequences on this chart, right? We know there's a sequence from this is an A to the B. There's also a sequence from the B to the potential C. We already got that. But what about from our potential C down to our D extension? There's another sequence there, right? Type in a wire yes in the question section if there's also another sequence probably someplace in here. Okay, so let's bring that in. So we got a sequence from the A to the B, we got a sequence from the B to the C, and we also have a sequence that will follow a path from the C to the D. So now let's go into this a little deeper. Now, if we look here, could price first go A, B, C, D before it goes A, B, C, D? Yes or no? And then it goes A, B, C, D. Is that starting to make some sense? So it can fulfill all of these Fibonacci. This is the path of least resistance to fulfill all the current Fibonacci sequences. So I've got to constantly ask myself, what is the cleanest path for all parties to be somewhat satisfied? So to satisfy this major bear, we could still go down this path. To satisfy this bear, we could go through this path. To satisfy this bull, we could go through this path. Everybody on this chart is satisfied if we go through this pattern. And chances are, and this is so valuable, chances are the pattern in the path of price will fulfill the easiest pattern to satisfy everybody that is in the know anyway. But we're not really done yet. This is the path that I believe we're going to move on. I am very confident we're going to move on this path. This AB right here, this AB right here is one of the main AB sequences that I'm trading. I believe we are heading down to 133.75. Once price hits 133.75, I think there is a fairly strong argument that we could see a rally at that point up to this 50 level, up to 51, right around in here. Okay, is this making some sense so far? All right, but if I'm looking at this, I can't get into this trade with my stop above this A and my target down here, right? Because that's just way too much risk to reward. Way too much risk in this trade. So what can I do to, one, increase my confidence in this trade, and two, lower my stop? What can I do? Well, within this AB sequence, well, we also have an A, B. So from this B to the C, we had a Fibonacci sequence. Well, that Fibonacci sequence is no longer valid because we broke that A, so that doesn't matter anymore. But from this C to the D, don't we have another C to D Fibonacci sequence that we can plot? Yes, we do, right there. So that automatically tells me, okay, well, this C to D movement that we think we're getting, I don't necessarily need to put my stop above at this 46 level. Type in a wire yes if you can see where I should be fairly confident bringing my stop down to maybe 44.13, right? Because that is the current A from this C to D movement. That's the current A, B sequence. Type in a wire yes, that makes sense. Okay. But, so we're trading to this extension here, this 2.7 extension. We're now looking to see where can we place our stop, because right now we can't place our stop above that A because it's too far away. We now said, okay, well, we can move our stop down and be confident because we're now trading this from the C to D. We've got this sub right here. This would be a sub swing that we can move our stop above that A. But we also have, what about this A, B, C to D movement? There's another sub within there. Type in a wire yes if this is making some sense. It's another sub right in here. Yeah. So if I want to, and I'm already in this trade, but if I want to, I can place my trade. I can simply go short now. My stop is a little lower than this because there's actually a little bit of a, it doesn't fit with any of these AB sequences, but there's actually a little bit of a, let me see if I can show you where's it at. Where's it at? Hold on 1 second here. 4075. Where did I plot that at? Right above there. There was another sequence that I caught, that I found, and another A that I believe is going to hold, and I believe it's right. Where's it at? Huh. Hold on 1 second here. Where did this start? February 21st. Why can't I find that? Right there. Okay. Yeah, okay. So technically this whole sequence, this is the right sequence, but then there's another one here and you can barely see it. This is getting a little too, sometimes I think what I'm about to say might confuse you and I don't want to do that. But just know there's actually an A within a sequence, an A right here that I believe we're going to be protected on. That's the reason why the original trade I have my stop lower. But for this purpose, and if we really think about everything we've just done, what we did is we said, okay, well, we can go through all of these Fibonacci sequences, right? This down AB can fulfill This up AB can fulfill. This sub down AB can fulfill. This sub, this, all of these can fulfill. That's so the cleanest path to fulfill all these, make everybody happy in the market, is this: A, B, C, D. Type in a wire yes if you understand that is the cleanest path to make everybody happy right now. Everybody on this chart as of right now. Okay, so when you open up my pound yen chart, you're going to see a stop that's a little lower. Again, don't want to confuse you, but the reason why is because there is a little micro sequence. It's a sequence within a sequence that started right here, and we've got an A, or we've got a level up in here. It's basically an area of resistance that should hold right in here. And so that's where my stop is. My stop is actually going to be at 40.75. And again, it just takes a little bit more advanced, a little bit more timing, more time around the markets to understand really everything that I just went through. But the idea was we know we need to go short, mainly because the major AB sequence. We also know we need to go short because it can fulfill all of these sequences and satisfy everybody. All the bears can be satisfied. This bull can be satisfied. We can all be satisfied if it goes through this pattern right here. And I'm going to just show you. I'm going to draw all this out, and I believe this will make sense. All right, so the major AB sequence that we believe we're in is right here. Let me start with the mini first. So this is the smallest AB sequence that we're trading right here. That will fulfill. This will fulfill. At the same time that fulfills, this will fulfill. That will give us a retracement in this right here. Down to here, up to here, that will fulfill, and then the major will still be intact, and this will fulfill and then bring us down to there. So what does all this mean? To say all that, I said all that to get to this point. What direction should we be trading in? Up or down? Down. Down. And if we move down, just know the reason we're going to move down is because we can move down and still keep the bull, this bull right here, that's a longer term hedge fund type of bull that maybe wants to try to push this up again. We can still keep them fairly satisfied even if they concede, you know, down to even all the way down to 26. This bull is probably going to end up being okay. And this bull is probably, if this is a hedge fund move, this is a big push. There's a lot of money in this move. They're probably going to start adding, and they know these patterns. Big players know these patterns. So the bulls, what they're doing is they're probably getting out of their positions right now and waiting to buy back lower down in this area here. So the trade is, this. I'm a seller down to 33.75. because that is this AB 127 extension. And I want to place my stop at 40.75. So I have a choice. I could jump in right now, and I'm already in this trade. I could get in right now, and I could have about 560 pips worth of profits. And my stop would be right around 115 pips. But here's the way that I'm trading it. I'm going to trade this with the grid. So let me show you how I'm going to set this up. So now that I know my direction we're moving in, and we're moving down, and we're moving down to 133.75, and the place that I'm going to be wrong, if we break above this level, I'm going to be wrong at 40.75. Because if we break above 40.75, then just to let you know, if we break above 40.75, then we're going up here first. Then we're going up here. The next stop is going to be up here. And at that time, if you want to stop and reverse and go long, If you want to do that, you can. So 40.75 is my line in the sand where I say, okay, I don't want to break above that. Now here's how I'm going to play it. I am now going to, now that I know these three questions, I have answers to these three questions, I am now going to use Joshua Martinez's grid trading formula. And this is what I'm going to recommend all of you using from this webinar going forward. And the way that I'm going to do this is I'm going to follow the exact formula that Josh uses. So I'm going to go from a daily, so on my swing trades, this would be more of a swing trade. I'm going to use the formula of going from a daily to answer these questions down to a 1 hour to create the grid. So from a daily, I'm going to go to a 1 hour. Now here's the formula. Before I do the formula, let me link, I'm going to link my stop and my target over to the shorter time frame. So I've got my stop, I've got my target. Now this is how you do the formula. It's a 4-step process. First step, I need to make sure that I have 500 bars, and this works on any time frame. I'm looking at a 500 bars on a 1 hour chart. This is for my swing trade. So number one, on a 500 bar chart, measure distance between the high and low. That's step number one. Step number two, so now let's measure that. Let's get the distance. So this is the low. This is the high, so 470 pips, right around 470. 470 pips. Number two, multiply the total from number one by 3. So if I take $470 pips times 3, that gets me 1410. So that's 1410. Number 3, divide the total from number 2 divide the total from number 2 by 2. So I take 1410 divided by 2 gets me 705. Number 4, divide the total from number 3 by 10. That gets me 70.50. Type in a wire yes if that makes a little bit of sense. It's that easy. You can use this on any chart, on any time frame. It's the same formula on every single time frame. 500 bars, measure high to low. I don't care if you're looking at a 1-minute chart, if you're looking at a monthly chart, whatever. Measure the distance from high to low on 500 bars, times it by 3, divide by 2, divide by 10. So what does this number here tell me? So number 4 tells me the size of grid I need to place. Number 4, the total of number 4 tells me everything. So what I do is I right click, I go to matrix, and this is a tool I'm going to recommend every single person in this room to get. I'm going to do 10 grids above and below. I'm going to do both sides. My grid is going to be 71 pips distance because it's 70. Actually, I'm going to round that down because I'm just going to do a whole number. 70 pips. So 70 pips. I'm going to sell. My stop loss is going to be 140.75. My target is going to be 133.75. How many pips do I have if I was trader number 1? If I'm trader number 1 and I just sell right now with the stop up here, how many? I have 560 pips worth of profit potential, right? Type in a wire yes if you agree. If I just sell right now, 560 pips. So here's what I'm going to do. I am going to close this trade and reestablish the trade. Every time I make 560 pips trading the grid, I'm going to close it out and book my profits and then reestablish. So watch this. Watch how this works. 1, 2, 3, done. Okay. Now, with a click of a button, I have all of my grids, all of my orders. I'm done. I don't need to do anything else. I'm done. Now, what if price were to take this path down? What if price were to go and take a path like this over the course of the next few weeks? Take a path like that. First of all, could you potentially see price, if it's going to go down to 33.75, could it potentially take a path like that? Absolutely it could. Yes. Absolutely. Right? I mean, it's not going to go in a straight line. It's not going to move 560 pips in a straight line, is it? No, it's not going to. So if it's not going to move in a straight line, then yes, absolutely could wave like this. So the grid trader, here's what the grid trader would do. The grid trader gets short right here. The normal trader gets short right here. They both take the same trade. The normal trader puts a stop above 40.75 and a target down here. The grid trader takes a short here. As price falls, takes another short there. Then price rallies up. Is already in this trade, already in this one. Once it hits this, takes another short there. So now the grid trader is in this one, and this one. As price falls, we're already in this, continues to fall. Now, when it gets down to this level here, let's do the math. Remember, I'm going to book profits. I want to make 560 pips. Once it gets down here, well, how much have we made so far? This trader here would be up 210 pips. Somebody add this up if you could, please. 210 pips. This trader here is up 135 pips. And this trader here is up 65 pips. So that's about 200. So that's about 410 pips, right? So far? So about 410 pips. Then right about here, the grid trader makes its first 560 pip profit. Why? Because right about here, that trade right there is up 250. Somebody add this up for me if you could. 250 plus 175 plus 100 plus 35. What is that? Somebody get that? That's 560, right? What's the target that the original trader is looking for? 560. Okay, so the grid trader books his or her first profit at 560 pips, right there. The normal trader is still in the trade and probably pretty happy. The normal trader is up 175 pips. The grid trader has already booked 560 pips and now reestablishes the grid and does the same thing. It reestablishes, then shorts there. Rallies up, shorts there. Rallies up, shorts there. Falls down, shorts again there. By the time it gets down here, how much are we up? Right about in here, just to let you know, right about at this level right here, what happens? We make another 560. Why? Because, well, let's just add up this. We got 250 plus 175 plus 100, so that's 275 plus 250 plus, so 175. What is that? 175 plus 100, so that's 275 plus 250, so that's 425 plus 35, that's 560. So we get another 560 here. Right there. The normal trader is up 315 pips. So that's good. The grid trader reestablishes the trade, goes short here, short here, short here, and short here. What happens? Well, by the time price falls down to about, I believe, down in this area, let me just make sure. It's 240, 170, so that's 170, so that's 270 plus 240, 270, 240, and this right here would be about 30. So a little further. So once it gets down at this point right here, bam, you got your another 560 pips. Right there. Bam. Now what does the grid trader do? Well, same thing. Reestablish the grid because we haven't hit our target yet. Get short here, get short here, get short here, and then we finally hit our target. So this last trade the grid trader would have made. So hits the target here. We made 75 plus 140 plus 200. So 75 plus 140 plus 200 makes 415 pips there. So let me just pause for a second. First question, if I'm a swing trader and I go short the pound yen right now with the stop at 140.75 and a target to 133.75, right? Could price go through on a 1 hour chart or any time frame? Could price look like this when it goes while it goes down to 133.75? Yes or no? Yes, there's absolutely it could. I mean, it's gonna wave down, right? I mean, it might not look exact like this, but it's gonna probably wave down. If it doesn't go above here, it's gonna chop around and go down, right? It's not gonna go in a straight line. Yes or no? I just want to make sure you guys agree with that. It's not gonna go in a straight line move 560 pips. Okay. And so it might not look exact like this, but it's going to look something like this, you know, it's wave down. Okay, so if I short right now with the target down there, the best I can do is 560 pips of profit, right? Well, if it does wave in some type of fashion like this and it goes down to my target, it doesn't get, and I don't get stopped out, then this is just an example of a scenario where I could make, instead of just making 560 pips one time, I could make 560 pips 3 times and then at the end make an additional 450 pips. So I turn a 560 pip trade into almost 2,100 pips by taking the same exact trade but trading it off of a grid rather than just trading it static. Type in a Y or yes in the question section if you are starting to understand and see the power of grid trading. It's huge. It's absolutely amazing. It's amazing. Benjamin, during the updates, it will automatically. So right now, what happens is after we hit our 560 pips, it will close out the grid and we have to manually reestablish the grid. And by the time let me just ask a quick question. Once we hit our 560 pip target right here, once we hit this, and we say, jackpot, we got 560 pips, are we going to probably reanalyze and maybe update our stop? I want you guys to answer that question. Would you just keep your stop at 40.75, or now that we've went down a little bit, we've kind of had some other precedent, would you reanalyze where you should place your stop so you can update your grid? You'd probably reanalyze, right? And so therefore, the grid trader is going to be managing this even better, reanalyzing, bringing your stop down, setting the grid up again, reanalyzing, bringing your stop down. So, but this is just keeping everything static, keeping everything the same. And so this is how I am going to trade the pound yen. And this is the reason why I'm already in a trade, and I'm excited. I'm in the trade. I'm going to stay in the trade. And this is great. Hopefully this example has gotten you somewhat closer to being convinced that grid trading, regardless of the strategy that you want to trade, grid trading will double, triple, maybe even quadruple the amounts of profit that you're looking to make. So here's the thing I want you to think about. When I invite you to be in this course and get this in your hands, I'm going to let you test drive this for 30 days. When I do that at the end here, what I need you to understand is really what I'm saying is whatever amount of pips you think you're going to make in the next 30 days, 60 days, next year, double that, triple that. That's what you'll make on the grid trade. I'll give you an example. I made 27,000 pips, almost 28,000 pips last year. I'm up about 4,000 pips this year. If I traded all my trades on the grid instead of just trading them normal like I normally do, I would have, instead of making 27, I would have probably made close to 55 to 60,000 pips last year. I'd probably be up 8 to 9,000 pips this year. That's, how valuable is that? That's unbelievably valuable, right? So any trade that you can answer these 3 questions on, what direction, where to, and at what price am I wrong, every single trade, and by the way, quick question, should you place a trade? Yes or no? Should you ever place a trade in the market if you can't answer these 3 questions? Yes or no? No, absolutely not. Even if you're not like that much of a trend trader, it doesn't matter. I mean, unless you're trading options, and we're not trading options here, you have to have a logical direction. You have to have a place where you say, okay, well, I'm going to get out here, and you have to have a place where you say, okay, I'm wrong here. Unless you're Warren Buffett and you have access to all the money in the world where you don't need to ever be wrong, okay. But no, you have to be able to answer all these questions before you place a trade. So next question is, if you have to answer all these questions before you place any type of trade, regardless of your style or regardless of your strategy, can you see how trading with the grid could very well and should very well make you much more profitable and make you many, many more pips? Yes or no? Yes. Andre, that's a good question. Josh is going to go over the risk management technique as far as the size to use on each grid to make sure that you're maximizing each pip down, to make sure that you're not dramatically increasing your risk, but you're also maximizing and dramatically increasing your profitability. To trade with the grid means you should expect to make 2 times the amount of pips with similar risk, and it will increase your odds of success. It'll increase your odds of success. Okay, so I'm going to go through a couple different trades here. This is a trade that I love on the pound yen. I'm going to go through the stop loss on this trade would be 40.75. So this is basically exactly how I'm trading this, by the way, guys. I'm currently short. My stop's 40.75. My target's down here, and I'm trading it with the grid. So I'm going to add as it falls. I'm going to add if it rallies up. This is how I'm trading it. Okay. Okay, so for you if you're a target trader, this is a must-have. If you're a leveling student, this is an absolute must-have. If you're a momentum student, this is an absolute must-have. Really, if you're any type of student that can say, okay, the market should go in this direction to this level, and this is where I'm wrong, you need to have this. I'm going to let you guys get this in your hands. We'll get, let me just double check the number here. We got 18 of you that left, 18 that will actually be able to get this in your hands as a risk-free test for 30 days, and then you'll be able to get it for the rest of your life if you decide to move forward with it. Now, some of you are still looking for that really clear-cut way to define direction, to define where the market's moving to, right? And then where you're wrong. So I'm going to give you guys a gift today. How many of you want me to give you a really nice gift? Everybody likes gifts, right? No, Tyson, please don't give me a gift. I don't like gifts. Let's see here. The buy scalp previous pound yen is not valid. Okay, here's the gift. All right. So with the questions in mind that we have to answer, right? There's 3 core questions we have to answer. Which direction, where to, and where am I wrong? This is one of the easiest ways to figure that out. What you're looking at here, by the way, I am not that big of a fan of an indicator, but what I am a fan of is indicators that are simplistic, and indicators that are like moving averages are very simplistic indicators that just spread price over a longer period of time and tell me really what a 200-day moving average tells. So this is a 200-day or 200 period moving average. What this is telling me is it's telling me what the market over the last 200 days feels fair price is. Type in a wire yes if that makes sense. This is the fair price over the course of the last 200 days. It doesn't mean it's the right price right now. It means it's over. That's kind of been the fair price. And that fair price has been coming down. And that fair price currently is probably a little more expensive than it should be because current price is below the fair price. It's kind of an indication of what fair price is. And that's the reason why, and prices don't stay at fair prices for long. That's the reason why levels of supply and demand are created. Now this is, I could build a whole course and a whole lesson around this, but prices tend to form big expansion moves around fair price levels. The reason why is because price doesn't stay fair long. It goes to a fair price and then it says, somebody in the markets, either the buyers or the sellers say, hey, that's a fair price. And then a bunch of sellers or a bunch of buyers come in because they like to pick it up at fair price, but they want to sell it at fair price. And that moves it to that next extreme. And it creates what's called supply and demand levels. Type in a wire yes if that makes a little bit of sense. Prices are never fair. The second you guys can buy an iPhone for what the market believes is a fair price, within a day, the prices will probably double. Because it's called supply and demand, right? You get a huge influx of either buyers or sellers at that point. And if the price, if the market is assuming that over long periods of time, the market is going to go down and then it goes back up to what's considered quote unquote a fair price, then you're going to, most of the time, you're going to form big levels of supply after you touch that level, just like we did here and here and here and here. And just like we're going to do right here. But again, this isn't a lesson in supply and demand, even though I could probably create an entire, well, there's a school that was created around basically what I just taught you right there, literally. There's a school out there that charges people $50,000 to learn what I just taught you. By the way, I used to be one of the directors at that place. Their name will go unsaid. Some of you might know who I'm talking about. I have nothing against them. They're good. They actually teach some really good stuff, but I just taught you it. So anyway, all right, so how do we answer the questions? If price is below, yeah, Bill, you got it. If price is below the 200 period moving average, and I have nothing against them. I think they're great. I just, yeah, anyway. So if price is below the 200 period moving average, then the direction, if we're going to think about the three questions we need to answer, the first question is which direction is the market most likely to move in? If we're below the 200 period moving average, you need to think that the most likely move is down. Type in a wire yes if that makes sense. Yeah. If we're above, then the most likely move is up. So if price is currently above the 200 period moving average, price is most likely going to continue to go up. If we're below, price is most likely going to continue to go down, okay? So that's step number one. Step number two is not all markets, so I used to get really frustrated. So I'm not frustrated, but I used to teach a lot at the company that I just mentioned, and I teach a lot of in-person classes, and I do help sessions and advanced classes and different things like that. And I do these in person, and I have groups of 25 students, 50 students, sometimes more. And I would always start the sessions with, hey, what is the current trend? I'd throw up a chart, and I'd look for the craziest chart I could find, and I would go and I'd say, hey, what is the current direction of this chart? And then I would have everybody come up to the chalkboard or the whiteboard and write down, point an arrow up or down. And inevitably, most of the time we would get, 60% saying up and, 30% saying down, and 10%, sometimes more, sometimes less would say sideways. One of my biggest pet peeves ever is, yes, the market does consolidate. In fact, the market consolidates most of the time. But the market is either consolidating within a downtrend or consolidating within an uptrend. Type in a wire yes. There's always 100% of the time a trend. Always. There is never not a trend. That is unbelievably important, because yes, it might not be a great trend, and it might be a consolidation of a trend that's maybe going to start a new trend, but there is always a trend, always. And So the thing I love about the moving average is the price is always, I guess technically it could be right on it, but chances of it closing right on it is very slim. We're always either above it or always either below it. That means we're always either in an uptrend or a downtrend. Now again, it doesn't mean it's a great trend. It just means there's always some form of a trend. Now, I will say this. I do agree that not all trends are created the same. So just because there's always a trend doesn't mean I should always trade the trend. Or doesn't mean I should always look, so yes, okay, we're in a downtrend if price is below the 200 period, but doesn't mean it's a high quality downtrend. I need to make sure that I'm in a quality trending market. And the way that I do that is I use something called the Keltner channel. This is one of the best ways, and I've studied this type of stuff for many, many years, and you name a way to try to optimize this, and I've looked for it. This is one of the best ways that I've ever found. This is the way that I've traded. This is the way actually I started making money. This is the first way that I actually started generating pretty decent income in the market using this style. And it's something that I still look at pretty consistently. So the trend is down, so we know we need to be selling, but I only want to trade in a high quality trending market. Well, the way that I define a high quality trending market, if I'm using this strategy, is if both bands of this is what's called a Keltner channel. And if both the red band and the blue band are also below the moving average, that is a high quality trending market. Type in a wire yes if you understand that. So like right here, this area right here, I wouldn't have considered this to be, yes, we're in a downtrend because price was closing below, starting right here, price was closing below, but until both bands were able to go below the 200 period, that technically wouldn't have been a high quality downtrending market until right there. Until price was able to, or until the Keltner channels, both the bands, upper band and lower band, were able to go below also with price below the 200 period. That then indicated a very high quality downtrending market, and we've been in this high quality downtrending market this entire time. Why? Well, because the Keltner channel and price, other than trying to peek its head above here, has stayed below the 200 period this entire time. So this entire area has been a high quality downtrending market. Now, just real fast, I think it's important for you guys to understand what a Keltner channel is. I'm going to give this strategy to you guys. I'm going to give it as a gift to you. My hope is that you use this strategy. If you don't already have a strategy like targets or something, you use this like a strategy like this with the grid. That's my hope. Now, a Keltner channel, just so you know what you're looking at, because it's important to understand what you're looking at. A Keltner channel is a very simple indicator, and what it's doing is this. I use a 21 period moving average for my Keltner channel. 21 represents about 1 month's worth of price action. It's also a Fibonacci number. That's the reason why I use 21 on my daily. What this represents is this. The upper band is 1.5 average true range, 21 period average true range above the moving average, and the down band, the blue band, is 1.5 average true range below the band. So these bands are the exact same distance from this moving average. Type a wire yes in the question section if that makes sense. That's what a Keltner channel is showing. Now, how do I use this? First of all, this tells me what trend we're in because we're below the 200. If we're in a high quality trend, now I need to ask myself the question, if I'm in a high quality downtrend, then what is my job as a trader? What do I have to do? I have to sell, right? I have to look to sell. If I'm in a high quality downtrend, I have to look to sell. But when should I start selling if I'm in a high quality downtrend? I should sell in a high quality downtrend when price is high, right? Type in a wire, yes, that makes sense. Sell in a high quality downtrend when price is high. How do I know when price is high when I'm in a high quality downtrend? When price is able to start closing in a high quality downtrend with price and both Keltner channels below the moving average, when price is able to start closing above the upper Keltner channel, that is your sign we are in a overbought market in a high quality downtrend. Type it a Y or yes in the question section if that makes a lot of sense, why this right here was a perfect sign that we are overbought in a very high quality downtrend and we need to start looking to sell. And how this right here was another opportunity. We are overbought in a high quality downtrend and we need to start looking to sell. Right? Now, when can we potentially enter this trade? Well, when we start to close beyond, in a high quality downtrend, beyond the band, and then we get our close back into the band, bam, sell. Where do we target? The other side of the band, because price has a tendency to move from one extreme to another. So, does it make sense why you would have had a brilliant short here? Does it make sense why you would have had a brilliant short here? Yes or no? Yeah. Yeah, it makes a lot of sense. How about here? And you can go back and look at this time and time and time and time again, and you could see time after time after time, up and down. Now this isn't fail proof. It doesn't work every single time, but you'll see many examples. And this would have taken a little bit of stop here. Many examples of very, very successful trades, time after time after time, because it is doing the things that we need to do anyway as a trader, which is define a high quality trend. If we're in a high quality downtrend, sell at a high price. If we're in a high quality uptrend, buy at a low price. That easy. So how do I trade this? So this is the trade. This is currently setting up right now. Right now we have closed outside. We're in a high quality downtrend because both price and the Keltner channels are below the moving average. We have closed outside of the Keltner channel. Yesterday's close, watch this. Yesterday's close closed at 42.37, 42.38. Yesterday's band, high band, was at 42.39. You know what that means? That means that yesterday, the day before, we closed outside of the band in a high quality trend. Yesterday, we closed back into the band. Type in a Y or yes in the question section if you understand you should have shorted on the close yesterday, shorted, using this strategy. Your target would be down here, down to the other side of the extreme band. So 139.41. That would have been your target if you would have taken this initial trade. Now, how would you set this up? Where would the stop be? Okay, so the stop on this, because I've got it, I know the questions. Question 1 is what direction are we moving in? We know the direction. Question 2, where are we moving to? The other side of the band. Question 3, where do I place my stop? Using this strategy, if we're shorting, click on the smart tools, click on smart resistance, and put your stop above a level of resistance that hasn't been broke yet. So this resistance here is broke. It was broke today, this resistance level right here. But in this example, I would be confident enough, because of the way the moving average is moving down, if you're not in this trade, I'm confident enough to place the stop above yesterday's high, because of the rejection that it's getting off of the 200 period moving average right there. So I've answered the question here. I've answered the question. Where is price moving to? At what point is what direction is price moving in? I should say. Moving down. Where is it moving to? It's moving down to 39.41. Where am I going to be wrong? I'll be wrong if it breaks above 43.35. I'll be wrong. Okay, how would I get into this trade? I would use the grid. Trade this with the grid. And I'm going to let you guys get into the grid and get into this course for no risk, for 30 days, for no risk. All right, so now I use the formula of the grid. What do? I measure. I go to a 1 hour, because this is a daily, so I'm setting up swing trades. Go to a 1 hour. measure from high to low. That's 395 pips. I'm going to take 395 times 3 divided by 2 divided by 10. It's 59. My grid needs to be 59 pips wide. So now what I'm going to do is this, is I'm going to take my matrix and my grid. I'm going to say 10 up, 10 down. I'm going to go on both sides. I'm going to sell the market. My stop is going to be 143.36. My target's going to be 139.41. My grid size is going to be 59 pips. And I'm going to hit OK. Whoops. 143.36, 139.41. I'm going to hit OK. And in a second, bam. Type in a wire yes if you can see that my job is now done. And all I've got to do is sit there and let this trade play out, work out. I'm going to trade the grid. And I'm going to take it to my target. In this trade here, I have a choice. If I traded it as a normal trader, I could short with a stop here and a target here. And I could make, let's say I got into it right now, I could make 255 pips to the downside. And that'd be great. But what if price does this? What if price waves down, which is, it's more than likely going to do something like this? Right? Well, if it does that, then guess what? I get short here, 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 and I add up all these on my way down. So instead of making 255 pips, somebody add this up for me. I make 64 plus 120, we'll just say 180 total, plus another 180, so that's 360, plus 230, so that's 580, so about 580 pips because I went to, so 580 pips. So this trade here, if I just shorted now with the stop loss there and a target here, would make about 250 pips. This trade here would make 500 to 600 pips if it just goes in this type of wave format. I'm going to double, if not triple, potentially my profit potential. Type in a wire yes if that makes sense. Guys, I highly, 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 highly recommend this strategy. Is awesome. I'm going to give this strategy to you. This is my gift to you, okay? This is going to be my gift to all of you. Now, all I'm going to ask from you is if you understand, here's what I'm going to ask from you in return. If you understand the concepts that I'm talking about and how the grid trader will, I'm telling you, double your profits, double your profitability, increase your probability, and save you time, all I'm going to ask in return for this is for you to give 30 days as a test drive to this. And so I have 18 of you that are going to be able to get this in your hands for 30 days as a test drive, and I'm going to go through all the details here in a second. But before I move on to the next, I want to give you guys an opportunity because there's 18. There were 22 left my last webinar. I can't believe we only had 4 people take advantage of it. We have 18 left now. So if you want to take a test drive of this, if you want to just take me up on a 30-day challenge, all I want you to do, and I'll go through the details, just type in your phone number with the word me. That's it. At the end of this presentation, I'm going to show you how I'm going to share this with you. You'll get all this. And I am going to, then your education specialist will reach out to you. They'll go over all the details. I'll also go into the details. I don't want you to think I'm going to show you all the details here in a second. But all I'm really asking in return here, I'm willing, listen, I'm an open book. I don't need to charge you for this strategy. I want you guys to make money. Now, there is a cost to the grid, but what I've talked the executives into doing is giving you guys 30 days to be able to trade it with whatever strategy you want, whether that's targets or leveling. By the way, if you're a target, leveling, or mastermind student, you got to do this. Like, you got to do this. You got to, I mean, you got, so, but even if you're not, even if you just have a strategy that you already like to do and that strategy gives you targets and it gives you stops and it gives you direction, I'm telling you guys, take me up on this 30-day test. You're going to be blown away. I believe that whatever pips you make in the next 30 days, if you traded normal, you're going to be able to double, triple, even quadruple those at times just by trading with the grid. So for 18 of you, I'm going to be able to get this in your hands. You're going to be able to do a test drive. I'll go through the details in probably about 5-10 minutes. I'm going to go through 1 or 2 more trades. Probably 5-10 minutes, I'll be able to get this in your hands or go over the details. But really, in my opinion, I'll go over the cost and all that. But here's the deal. In my opinion, the cost is irrelevant. I'm going to show you the cost, but the cost is irrelevant. If somebody comes up to me and says, Tyson, pay me $100,000, and over the next 30 days, that $100,000 should help you generate $200,000 or $250,000. Well, then guess what? And if it doesn't, I'm going to give you back your $100,000. Well, then I'm going to probably look for a way to find the $100,000 and do it if I trust the person. If I say, okay, here we go. Because what am I going to lose? I'm either going to either double my money or I'm going to get my money back. So I'd be crazy not to do it. So the cost, in my opinion, I will go over the cost, but from my standpoint, it's almost irrelevant because we're going to subsidize it. We're going to basically take the risk over from you, and you're going to be able to test drive it. It's 30 days after the class, by the way, 30 days after the class. And so test drive it for 30 days. But anyway, so let's go into one more. So I'm not a day trader, but if I were a day trader, then let me just show you some of the trades. Actually, okay, I'll just do this real fast. So the same settings on a 1 hour. This is the 1 hour. This is the same exact settings. I've got a 21 period with a 1.5 ATR, 200 period moving average. Same settings. It makes sense on a 1 hour. So with that said, what direction do we need to be trading the pound dollar in? Up or down? This is the 200 period moving average. Up. Are we in a high quality trending market? Are both bands above the 200 period? Yes. Have we recently gotten to a point of being oversold in a high quality uptrend, much like we were right here? And look at this. Bam. Yes. So right here, right now, this bar right here, you could go long, could have went long. Your target on this trade could be 28, right around 28, 25 would be your target. So that's not, this is a day trading strategy, 28, 25. Your stop could go below this low down here. And this is what I would do. Now pull in and do the formula on a 5-minute chart. So I'm going to show you this. If you want to day trade, this is a day trading strategy too. Take the high to the low and do the formula. It's 93 pips. So 93 times 3 divided by 2. I'm going to set my grid up 14 pips wide. 14 pips. So now I'm going to right click and I'm going to go to the grid. All right, so now I'm going to pull up the matrix. It's going to be 14 pips wide. I'm going to do both sides. I'm going to buy. My stop is going to be 127.56. Target will be 128. Now, I do not trade this style, but I just wanted to show you this. Some of you are day traders, so you could trade this style. I hit OK. Done. Type in a wire yes in the question section if you see I've now set up my grid to day trade up to that point because we are in a high quality uptrend at an oversold market. I need to trade the grid up to that level. Done. This should be a very high quality, high probability, just like it was back here. This should be a really nice trade. Pretty cool, huh? Pretty easy. All right, let me do one more daily, and then I'm going to show you guys how to get into this. Let me do one more swing trade because I'm much more of a swing trader and position trader than I am a day trader. So, Aussie, New Zealand. All right. So Aussie, New Zealand, does anybody notice anything that's interesting that just happened yesterday? Just happened right there. Yes, we're in an uptrend. We're in a high quality uptrend. We are oversold in a high quality uptrend, and our target should be 109, 109.12. You could have established this position yesterday. You could place your stop below this pivot down here, this is where I have my stop. Place your stop below this pivot down here. Place your target up there. We know we're moving up. We know where we're trading to, and we know where we're going to be wrong. Now, from this point, what I want to do is I want to now transfer this and do the formula on a 1 hour 500 bar chart. 1 hour 500 bars. So now what I'm going to do is I'm going to measure the distance, 325 pips, 325 times 3 divided by 2 divided by 10. I need my grid to be 49 pips wide. So now I'm going to right click here. I'm going to bring my matrix over. I'm going to buy 49 pips above and below the market. My stop loss is going to be 106.05. My target is going to be 109.12. I'm going to hit OK. Done and done. My friends, using the Keltner channel strategy with the grid, these are my two favorite trades in the market right now. I believe these two trades right here will produce, well, this Euro Aussie trade will produce probably 500 pips, and this this Aussie New Zealand, if it goes up from this point, will produce, we'll just do the math with me, 160 plus 120, so that's 280 plus 70, that's 350, probably about 375 pips. These two trades within the next week to 2 weeks, this should produce about 375. This should produce about 500 to 600 pips. Between 800 and 1,000 pips using the grid with a high probability trades on these two strategies, on these two trades. My gift to you today is your guys' ability to get this strategy in your hands. Now, all I ask from you in return is for you to seriously test out the grid and give us 30 days to test this out and convince yourself. I don't want, don't take my word for it, but convince yourself that this will double, maybe triple or quadruple what you would normally make anyway. As long as you know the direction, the level, and where you're going to be wrong, you need to place every trade you're already in. You probably need to put on the grid. Type in a wire, yes, if that makes sense, and type in a me if you want to know the details. And then I'll show you how I recommend how you can get this strategy. Okay. Before I show you the details real fast, actually, I'll show you this. I'm going to go through the details first, and then I'll come back and show you where I saved this strategy and show you what you need to do. All right, let me go through the details first, though. Okay, so this class is Joshua Martinez's creation. This is an absolute phenomenal creation. I want you guys to understand something that I think is important for me to mention. This is not going to change the way that I trade. I'm not telling you guys to change the ways that you trade. If you're a target trader, leveling trader, whatever type of trader, continue to do what you've been doing. Continue to be on the path that you've been going on. All I'm saying is every trade that you take, I can make a very, very strong argument, probably an absolute factual argument that you need to trade with the grid on every trade you take. And so for me, this isn't going to change the way I trade. It's just I'm going to trade the grid. I'm going to take trades, same trades I would normally take, just with the grid. Josh is also going to teach you a set and forget no-brainer strategy where you can literally go to any chart on any time frame and set the grid up and not even know anything about the markets or direction, and you can be right 90% of the time. He's going to teach you that in the course. But he's going to teach you 3 strategies: position, swing, and scalp. It's a 4-hour course. You're going to get all on demand. This is going to be in mid-May. Josh is going to be the one that teaches it. Now, the other thing that's really cool, in fact, this is like really, really cool, target traders. Okay, target traders, imagine this. Imagine you have a target 500 pips above current price, right? And you want to get in. It's 500 pips above current price, but the RSI is not in the buy zone yet, so you got to wait. Imagine being able to set your grid up, but instead of having the grid trigger right away, you set it up with an activation rule. So you say once the RSI gets in the buy zone, boom, activate the grid. It can automatically do it for you, so you don't have to be in front of your screens. You just set the trade up, set the activation up, and walk away, and it does it all for you. That's coming with the next update, and you guys will get that. The 18 students, the first 150 students that get this in their hands will get that. It's absolutely huge. I love it. Here's the expectations. This is going to help you optimize and basically double your returns on any strategy you use. Whatever strategy you use, whether it be targets or whatever, if your expectations over the next 6 months is to make 6,000 pips, double that. Over the next year, if you think you're going to make 10,000 pips, double that. That's what your expectations with this should be on every trade. He's also going to teach you, Josh is going to teach you a no-brainer strategy that's right 90% of the time. Just even if you don't know anything, you just use the formula, plug it in, and you're done. Now, I've got 2 bonuses for you, and then I got a very special announcement. For those students, I've got 18 of these left. The next 18 students that go into this, I've been told it's either 18 or the end of the day. That's what I've been told. But the next 18 students, because I got to assume that those 18 will be gone, will get this. You're going to get 3 months of trading with Josh in what he's calling fill in the gap session. He's going to do a monthly session that's 4 hours long. It's going to be intense. It's going to be awesome, and there's going to be a lot of profits in it. Normally, you would get 1 month of this. You're actually going to get 3 months of the fill in the gap sessions. That's a huge bonus. One of the biggest bonuses that I believe should hopefully get you over the top and have you type in your phone number and getting into this is this. If you decide to go into this, and this is for the next 18, we rolled this out to the first 100. We then added 50 more students. With 18 students that get this remaining. Those students will get the grid for life, meaning when you go into this course, if over the next 30 days you conclude, at the end of 30 days you say, yes, this is amazing because we have a 30-day money-back guarantee, you will never have to pay. We're eventually going to go to what's called a subscription model or a monthly charging fee for this. So what you'll have to do in the future is you'll have to pay a lump sum for the course. You'll then get the grid for anywhere from 6 to 9 months, okay? And then you'll have to, after that, you'll have to pay a monthly maintenance or service fee. The first 150 students will never have to pay that ever. You'll get it for life, for the rest of your life, and you'll never have to pay another dime for it. But you have to be one of the next 18 students. So if you type your phone number in right now with the word me, you'll potentially be one of those 18 remaining students. Now here's the kicker. Here's the way that this kind of, we're going to put this over the top. Here's the way that we're going to hopefully help you make your decision. I'm going to tell you the cost of it in a second, but really all I'm asking for is 30 days. You give us 30 days after the course, so you got 30 full days after the course, and you take this and you set this up and you set up the grid on all the trades that you would normally take. And if you're not completely satisfied within 30 days, then you get all your money back. And the way that I would set this expectation, if I were you, the way that I would make my decision, I'd say, okay, well, I'm going to do this, and if in 30 days I don't see doubling or maybe even tripling the profits that I would have normally made, then you know what? I'd get my money back. Because I believe your expectation should be to double, triple, maybe even quadruple the amount of pips that you would normally make. So if you're going to make 2,000 pips in the next 30 days, well, now your expectation should be 4,000, 5,000 pips. Now, I only have 18 more students that I can do this for, the 30-day satisfaction money-back guarantee. The 30-day clock starts after the class, so it doesn't start today. The 30 days starts after 30 days after the course, and the course is going to be in mid-May. I want to make that very clear. So your 30 days, it's not like you have 30 days from today. So, but here's the deal. If you are not a grid student, I want you to simply type in your phone number with the word me. When you do, it doesn't mean you're signing up. It means that we're going to have a conversation. You want to see what we could do to get you in this. Now, if you were to go out and we were to, put all this together and charge you the retail value, overall, this is about a $5,500 package with the course, with the follow-ups, with the bonuses. But you're not going to pay that. You're not going to pay anywhere near that. In fact, I believe the cost of this is actually irrelevant at this point. But what we're going to still do with the 30-day money-back guarantee is discount it substantially. So instead of paying the $3,400, or instead of paying the large lump sum of $5,500, you're actually going to only pay $2,295. We offer financing. We offer all sorts of ways that we can get you into this. The most important thing about all of this is the fact that all we're asking for is 30 days. So if over the next 30 days you don't see your profit's doubling. If over the next 30 days after the course, you don't convince yourself, don't just take it from me, but if you don't convince yourself that you can do this, and this is going to be very, very profitable for you, then it didn't cost you $22.45 because you got all your money back. Think about that. So what did you lose? You lost nothing. But what if I'm right? And I am right, guys. This is not a what if. I am right. So if I am right, then you've convinced yourself in the next 30 days that it's well worth $22.45. You're super excited that you have this as part of your tool set, and you never have to pay the monthly subscription fee ever again. If you decide to wait and get into this, let's say next month, and you wait, the cost of the class is probably going to be higher, and let's say it's the same price. Let's say it's $22.45, and we don't do a 30-day money-back guarantee. And then we only give you the grid for, let's say, 9 months. That means after the 9 months, you're going to then have to pay every month a monthly subscription fee. That's what students eventually are going to have to do. For you guys, it doesn't make any sense, in my opinion. If you're thinking about getting this, then you might as well do it when you don't have any risk to you. You get a 30-day money-back guarantee, and you might as well do it when you get to keep it forever without paying another dime for it. So here's what I want to do. I want to pause for a second. I want to thank those, and I want to encourage every person in here that's a non-grid trader. If you haven't spoken with your education specialist in the last week, in the last 4 days, I want you to simply type your phone number in. When you type your phone number in with the word me, it doesn't mean you're automatically signing up. It doesn't mean we're charging you. It means you want to know what you can do to potentially be one of the 18. It means you want to know what you could do to, Tyson said that my expectations should be doubling what I'm normally doing. You know what, let's see if I can put this to the test. So tell your education specialist you're willing to give this a try for 30 days. We'll see what this does. And if it's awesome, if it's as good as Tyson says, then you know what? Yes, great, this is awesome. If it's not, then get your money back. It's that simple. But the beautiful thing about this, if you think about it, is it's not me trying to convince you of this. It's really you convincing yourself. Because if you don't convince yourself, you end up getting all your money back and you didn't pay us anything for it. So I want to thank those. Anthony, thank you. I've got your number. Now, remember, I only have 18, so it is very important you answer your phone. Your education specialist is going to go over all the details with financing. If you need help with financing or vouchers or something like that, we can work with you. So don't let the cost of this get in the way of you making this decision. Tor, thank you. I've got your number. Gary, Anthony, Carlene, Devan, all got your number. Angelo, Kevin, Richard, AK, Peter, thank you. I've got your number. Now, again, remember, if you type your number in, it doesn't guarantee your spot. It doesn't mean you're getting charged. It means you're willing to have a conversation. We're going to give you 30 full days to convince yourself. So it's not what Tyson says, convince yourself of it. And you'll get it. If you do convince yourself of it, you're going to get it for life, right? You'll never have to pay for it again. Now, I am going to suggest one thing. I have already shared these workspaces with you. The way you access this workspace is by going like this. Now, everybody watch. Go workspace, open expert workspace, scroll down, find my name, find Tyson Clayton, and look for daily MA Celt and weekly MA Celt. Click on those and hit open. When you open these up, what you'll notice is, well, the strategies are on there, but you can't make any changes to these strategies. There's nothing you can do. You can't change them. But here's a little secret. Once you open these up, what I want you to do is go to up here, go save workspace, save the computer, and hit save. When you do that, and so now I save that one, and I'll come over here, and then I will go here, save workspace, save the computer, save. When I do that, now watch this. Now they've been saved to my workspace. Now if I go open workspace and I find the ones that I just saved, now I have the actual workspaces saved here, and now I can make changes. And there you go. There's the template. Cool? Everybody good? No, they won't have, Jerry, they won't have the grid on them yet. No. The only thing that the template will have is the Keltner channel and the moving average. It's not going to have the grid. You got to establish the grid yourself. And remember, Josh is going to teach you and help you get comfortable with the grid formula. right? For now, if you want to go back and watch some webinars and stuff, that's all good stuff. But yeah, you shouldn't. Yeah. So let me just let me see here. Give me a second. One second here. I apologize. Yeah, I'm going to repeat that here in a second. One second. Okay, so all right, close out of the workspaces that I just sent you. I'm going to re-upload these to make sure we've got the right ones in there. I'm going to clean these up a little bit so you have the right ones. I want you guys to be able to open up the right stuff. All right, give me a second. All right, so the way you do this is let me upload this, upload workspace. So now that I've uploaded this, you can go into workspace, open expert workspace, and find daily MA Celt, and then hit open, and then you'll save it. Day trade Celt. I'll save this, and then you can save that. Let me clean this up though. Day trade Celt. Let me save that. Weekly Celt. Let me save this. Almost there, almost done. And it doesn't really matter what chart I put it on because you're just going to use this as a template anyway. But let me save this weekly Celt. Upload this. Okay, so now what you do is go into each one of those, open them up, and then save them to your desk or save them to your own charts, and now you'll have them forever as long as you save them, okay? Here's the deal. My recommendation, that's my gift to you guys. You're welcome. I'm glad you're welcome. And I'm happy to do that. I really am. Very, very happy to do that. But this is the big thing I need you guys to understand. I do not recommend you guys trading this strategy unless you trade it with the grid. I am not saying that just to have you buy the grid. I honestly, I'm not saying that. I'm saying it because I want you to make the most amount of money. Whether you want to trade the Keltner style, whether you want to trade target trading, whether you want to trade leveling, mastermind, whatever it is, trading with the grid is going to make you more profitable. It just is. It's going to make you more money. It's going to increase your probability and save you time. So give us 30 days, test it out, and then prove it to yourself, okay? So I'm going to keep this open for a few more minutes, everybody. All right, remember the bonuses you get. I have 18 more students. If you haven't typed your number in yet, all I ask you to do is type your phone number in with the word me. Talk with your education specialist. Have a chat with them. See what they can do. They might be able to shock you on what they're willing and able to do. Don't let the money get in your way. We're willing to work with you, okay? So thank you to Naeed. Thank you. I've got your number. Richard, Tor, Joan, Gary, everybody else. One thing, if you haven't talked to your education specialist, if you're not a grid trader yet, simply type in your number, talk with them. Devon said this is a game changer. I agree. This is a game changer even for me as a 17-year trading veteran because I literally have the expectations now. I do very well, but now my expectations are to do twice as good as what I normally would just by trading with the grid. That's it. It's going to be great. It's going to be great. Robert said already bought it. That's awesome. I know a lot of you already got it. I'm going to keep this open for a few more minutes, everybody. On that note, I want everybody to have a great day, great weekend. If you haven't yet, I'll keep it open for a few more minutes. Simply type your number in with the word me, chat with your education specialist, see what we can do. I want you guys to trade in the grid, okay? Thanks, guys.